Okay, Trader Ash, you can see up here, I trade futures indices. This is the S&P 500 futures contract for expiring in September. I start with the month, and from what I see here, you're looking for lower prices. How did I get that? Price came up so far for June and took out that August high, but it also came back and closed lower than the August high. That to me is a sign of lower prices. If it wanted to go up, it would have break this August high and close above it, but it closed below it. Now I'll go down to the week to see if I'm getting the same thing from the weekly for confluence. And as you can see here, 1 minute, let's see if I can move that out of the way. Yes. As you can see here, I do all my charting on TradingView. So here on the weekly, last week we did come down from an imbalance. The week before we went up, broke the same August high, closed higher, but I trade off imbalances as well. This is an imbalance, April 18, an imbalance. That price wanted to balance, so it traded up into that imbalance and it came down and closed within it, which indicates lower prices. So it's respecting this bearish imbalance. And then it came down and it traded lower. So again, lower prices on the monthly and the weekly confluence. So I go to the day chart and I see what the day chart is showing me. And it's doing the same thing, lower prices. So the day chart showed where it went up and break that same August high into that weekly bearish imbalance and immediately came back, closed within it, and started price down. Now, where does price want to go? And that's why I say you have to have your target on the daily. How I trade, that would be called draw on liquidity. And draw on liquidity simply means what is drawing price to it? Where does it want to go? So I deal with ranges, and it's where the market wants to balance. So it goes from premium to discount, premium to discount. So you have to identify the price range, and then you put a fib on it to find out premium and discount. So all I'm doing now is putting my horizontal lines on like I told you I usually do. And then I will break it down and show you what lines I have on my chart and what they mean essentially. So let me go to group 1 and identify my lines. Yes, so that's what I want here. So if you notice on the daily, this is Friday's price candle. We open it up. Friday's candle. The low is in the red, which is the low of the candle here, at 43.8150, and the high of Friday's candle is 44.27. So I'm going to look at Monday's price and watch how it reacts to the high of Friday and the low of Friday, whichever one it takes out, or maybe both. And like I said, price will give me an idea of where it's going. But for now, according to the monthly, weekly, and daily, I'm looking for sales. Price is bearish. But according to this, it's also telling me it may go up a little before it comes back down, which is the retrace you and I were speaking about earlier. Because it came and it traded down into this imbalance, this green box that says FVG is an imbalance to push price higher. And if you see, that's what it did. It came down into this imbalance and price went up and closed higher. It didn't keep going down. So I have to watch that because it's indicating it may go up to come down. And this is the daily price range, premium and discount that I was telling you about. The high is in the premium, the low is in the discount. So when I take my fib from here to here and run it, I get equilibrium. Price always wants to go back to equilibrium. Goes to equilibrium, then it goes to the opposite, discount to go to premium, discount to go to premium. But whenever it gets to the other extremes, it always finds its way back to equilibrium of a price range. So this is telling me price wants to come down to this equilibrium, but because it reacted to this imbalance and bounce off of it, close higher, it's telling me it wants to go up before it goes down. So I'm going to go down to the 90-minute. And here we go. This is the imbalance on the day, this big red square, sorry, on the week. And the small red square is the day imbalance where I think price wants to go after it hits this equilibrium. I don't know. It might hit it before, it might hit it after. But in any event, my drawn liquidity is showing this equilibrium of the range price. It's pulling price down, but it may be pulling price up as well to this imbalance. I gotta watch. But if I was a betting woman, I'd say it's would hit this equilibrium before and then reverse and come up to hit this imbalance to come back down. That's why I see bearish prices on the month. So that's how I see price coming down to the equilibrium, going up to the daily imbalance to come back down. And then when I go to the 15, as you can see, let me put on my days. What I do is I mark the days of the week. So let me see if I could find my days of the week, because I like to see when price takes out previous days, highs and lows, etc., and see how it reacts to that. That's very important to me. So I like to mark them up on my charts, previous days, and then mark their highs and lows and Asia Open, because I need to see how price reacts to Asia Open as well. So as you can see, Monday just showed up and Friday just showed up. So Friday's high happened at 3:15 in the morning. That's this green line. And Friday's low is at 1500. That's this red line. Price is in the middle of that. So when price opens at 1800 tonight, which is the Asia session, I want to see how price reacts. But I'm watching to see, because price took out these lows, as you can see. It wicked down, but it came and wick up and closed higher than the lows. So that shows me higher prices, which is what it did. Traded up into this imbalance here, this red rectangle that says FVG, which is bearish, pushed price down, but price didn't come and take out this low. So that indicates that price wants to go higher before it comes lower. So I would say price looks like it wants to go up into this imbalance, which is in the premium, because this is the price range from the low to the high. 50% is equilibrium. Right now it's in the discount. So it's showing me it wants to go up to this imbalance in the premium, which is above this 50%. Then it's going to come down into this equilibrium, then trade up into this daily imbalance to go down. So that's how I see price. And then I watch it and go all the way down to the 5 minute, but not until I want to take a trade. But until then, I'll switch between the 90 and the 15 minute. So for me, the S&P 500 for next week is showing bearish price action, which means I'm going to be looking for sales. Let me know if you have any questions.